All right. If you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. They even offer some of the highest yields in the industry, like the bond account's 6% or higher yield remains locked in even if the Fed cuts rates. What sets Public apart is how they give you the tools you need to make informed investment decisions. Their built-in AI tool called Alpha doesn't just tell you if an asset is moving, it tells you why the asset is moving, so you can actually understand what's driving your portfolio's performance. Public is a FINRA-registered, SIPC-insured US-based company with a customer support team that actually cares. Bottom line, your investments deserve a platform that takes them as seriously as you do. Fund your account in 5 minutes or less at public.com/investing unscripted and get up to $10,000 when you transfer your old portfolio. That's public.com/investing unscripted. Paid for by Public Investing. Full disclosures and podcast description. I'm pretty sure we're live now, my good friend Jeff Santoro.
I think you are right. I see us on the YouTube.
We're on the YouTube. We're on the live on the YouTube. Hey, everybody. I am Jason. He is Jeff Santoro, the voice of the people. Welcome to Investing Unscripted's monthly First Friday live stream. We're three for three.
I don't want to jinx it, but we have a pretty good streak of First Fridays being on the actual First Friday. So we'll see what March brings. But yeah, we're doing our thing.
Pretty good. It's pretty good. Yay us. Go us. All right. What are we talking about today?
Sports. I think it should be mostly about sports. It's the big game weekend. We can't say what it is.
Soccer game this weekend?
Yes, there's a match on the pitch.
Match on the pitch. Yeah.
And it will end 0-0.
So here's who's your team? You have to be Fly Eagles Fly, right? Giants fan? You've got to be Fly Eagles Fly.
What? No.
I just said that to get that reaction. Just wanted to trigger you.
So here's my hot take on football as it pertains to this weekend. I am not one of those Chiefs haters like everyone else in my house. My kids are fully bought into the conspiracy theory that the league purposely tips games
gave
towards
the Chiefs the game.
Right.
Yeah.
Anytime they're in the room and the Chiefs are on and there's a penalty against the other team, they're like, of course. See, exactly. Like they're so bought into this conspiracy theory. Here's my thing. I don't really care about the Chiefs, but I actually do think it would be cool to see a team win 3 in a row.
Yeah.
Like that would be fun to watch. Now, if they were not playing the Eagles, I'd probably root against them. Right. But I want the Eagles to lose twice this weekend. Like that's how much
you're a good New York Football Giants fan.
I hate the Eagles. I hope they lose twice.
Yeah.
I also have so a lot of my wife's family and in-laws and stuff on that side are Eagles fans. So I will be away this weekend with my nephew. He's coming on a trip with us. He is a huge Eagles fan. So I have a lot going on this weekend. But I did make a bet with my brother-in-law and my cousins-in-law that early before this year started, I made a bet that the Giants would win a Super Bowl before the Eagles would. Like the next team between the two of them that would win a Super Bowl would be the Giants. Now that is not looking good for me at the moment.
Not a good look.
But if the Chiefs win this weekend, then I live to fight another season. So
let me just say real quick for the folks that are hopping on and listening to the investing guys talk about sports. This is going to end pretty quick. I do want to make like an investing.
Although, hold on, wait, we did toy around with starting a side podcast where we just talked about sports, but we bailed on that idea.
But that was going to be like even like the nichiest of niche sports, and just like the two teams in the same division of the football.
It'll just be Mets and Braves. That's it.
Yeah, just Mets Braves. It's Mets Braves. So what I wanted to say though is like I just think it's one of those things that's like the ridiculousness about the idea that the league would try to throw the game in favor of the Chiefs blows my mind, because you know what the NFL wants? Lots of fans to watch. You know what a lot of fans don't want to watch? The Kansas City Chiefs again.
Yeah.
In the Super Bowl. If the Bills had won,
this is not one of their best matchups, I don't think.
No. So I mean, look at the secondary market for tickets for the game, right? They're down. So, all right, that's enough of that nonsense. We got some people joining it. I just want to say this. I have to acknowledge this right off the top. Colin Waugh, our good friend from north of the border, is in the comments. I'm very excited about that. Speaking of sports, Jason, you pull that hair back into a ponytail and or pigtails when you're getting geared up for pickleball. Wow, you brought all the insults. So that's a person that read the email we sent out right there.
Yeah,
that's what that is. That's good.
Yeah, we only got one comment about my joke about people with ponytails, so I got away a little bit unscathed on that potential audience member losing comment, but nice to have a ponytail comment back on the show.
Love it.
Yeah, we got Cena joining us. We got Lancer 777-111 saying go Chiefs.
Lance? That might be Lance.
Yeah, maybe
Lance. You have to let us know. John Gallegos, who may or may not have seen me on another live stream on another channel at some point today in the same flannel shirt.
We got someone joining. Simon's joining us from Berlin, late night. Simon spends his late nights with investing unscripted and a beer. I like it.
Love it. Absolutely. Absolutely.
Yeah. Colin says, hope you prepared to pay a 25% tariff on my comments coming from the Great White North. Too soon, Colin. Too soon.
Right on time, Colin. Right on time. All right, let's get into the nuts and bolts of what we're going to talk about here.
So it's interesting. When I was thinking about what we should talk about, because I'm the only one who prepared for this show at all.
Can confirm.
Yes. I want everyone to know this, a little behind the scenes. So I sent Jason a text very early this morning and said, hey,
there's your first mistake.
I planned some stuff. It's on our shared doc. Please add some things. And Jason opened it for the first time about 9 minutes ago. So
I don't know if it was 9 minutes ago.
All right. But here, I was thinking about all the things that have happened since we last did a live show, right? At the beginning of January. So we had the inauguration, actually, obviously. We've had all the tariff news. We've had and then we had the DeepSeek AI news that came out last week.
Earnings.
So what was that?
Q4 earnings for
yes, and then earnings have started, right? So there's a lot of places we could start. We got AI news, we got earnings, we have tariffs, so we can talk about market vibes.
The Chiefs were given like 6 wins, apparently.
That's right.
That's happened.
Yeah, and the Chiefs made the Super Bowl because of the conspiracy to get them into the Super Bowl.
I wanted to say that. We have to go back. I wanted to say that because there's my dumb brain. I always look for business and finance and investing ways to think about these things. Like, if the league is going to throw something, they're not going to put a team like that. So what I wanted to ask you though, if the league could manufacture the Super Bowl that they wanted, I can't say that. If the league was going to manufacture the perfect game that they wanted, what would it be?
Honestly, they would pick whatever matchup they calculate would give them the most money. That's what I'm asking.
What do you think it would be?
I think actually having the Chiefs would have been fine. I just think maybe a different opponent that hasn't been there recently. Like Lions Chiefs would have been kind of fun, right? You got Detroit hasn't won a Super Bowl. I think Detroit's never even been to a Super Bowl, if I remember correctly. So anyway, we're back on sports, which we said we wouldn't do. All right, let's start with AI, Jason, because I think this sort of dominated the news, not this week, but last week. We had the DeepSeek news drop over the weekend of last weekend, and then the markets reacted to it on Monday. Anything that touched AI dropped pretty precipitously. But then it kind of stopped and some things even clawed back over the last 10 market days. But what was interesting to me about the whole thing was I think it leaves us all, especially us people who aren't, technology people who work in the industry and things like that, left sort of wondering what it all means. And it's sometimes these market moves and these big news events can give a solid answer, but a lot of times they leave you with more questions. And I feel like, personally anyway, I'm left with more questions. This could end up being the thing that really hamstrings NVIDIA's growth, just as an example, or it could be something that actually is a catalyst for NVIDIA, right?
Right.
So I'm curious, like now that we're a little bit past it, what your thinking is on the state of AI generally.
So the first thing I think, if we just look at what the hyperscalers, Amazon, Microsoft, and Alphabet, and Oracle too, what they've reported in terms of their CapEx spend, either they're trying really hard to hold, to try to keep their stocks up, or like they see what DeepSeek showed in terms of the leveraging down of the cost to develop AI is a tailwind, right? Which, I mean, the biggest one was Amazon reported this morning, yesterday afternoon.
Yesterday afternoon. Yep.
What do they say? They're like planning to spend $100 billion.
Yeah, it was more than that. It was like 150. It was some crazy number. Yeah, a lot of money.
Yeah, and basically everybody else is holding pretty steady. And to me, what this says is the idea that we were going to expect these companies to like pull way back, versus the other, like, so there's two ways to think about the DeepSeek news. The kind of just the core of it is like, hey, there's better ways to build more efficient large language models that can do more with less resources. So there's the, oh, let's just be cheap approach, or the, okay, if we can be a little more novel with the way that we're building the software, just imagine what we could do with real compute, like real serious horsepower. And it's obvious that the pursuit for more powerful AI is far more important than driving out the cost of the AI at this point. Because again, LLMs, this isn't the goal. They're not trying to get to these text generative based things that we have now. The artificial general intelligence, that's still the race, is to get to like quote unquote real AI. Right. So the race is on. The race is on.
And anyone who's interested in this should just Wednesday of this week, we dropped our latest podcast, and we interviewed Nick and Casey Rossalillo again to talk specifically about this. And we recorded it, I think, the day after the DeepSeek news, or 2 days after, and then it came out this Wednesday. But we talked a lot about this exact thing, and the is it Jevons paradox, right? The idea that this realization that you can make these large language models more efficiently and with less energy consumption could actually accelerate all of the spending we've seen, because if it really is cheaper and easier, it could speed up adoption, right? So maybe we'll see more AI in the future because it is now cheaper and easier, which will then just accelerate all of the spending we've seen, because like you'll need more chips from a volume perspective versus maybe just from a compute perspective.
Well, and the paradox aspect of Jevons paradox is that with something like software, you can slash the cost significantly, and it increases uptake so much that because of the fixed cost to develop software versus manufacturing a widget, you end up making more money. Like it ends up being bigger, right? Yeah. So it is really interesting.
I have two other ways to think about the news, the earnings news that we got this week from the big tech companies as it pertains to spending on AI. So like there's the piece that you said, right? Like they obviously still see a need to spend. Simon's got a comment here. I see Amazon is scaling to meet demand, especially as they offer DeepSeek and AWS. The second way I think about it is, if there really is going to be some sort of shift in spending because of DeepSeek, it is possible that the tech companies maybe don't even quite know exactly how that shakes out yet. And,
nobody knows exactly how it's going to shake out.
Right. But then the third thing, and this is you can tell me if you think I'm thinking about this completely differently or wrongly, but so some companies guide CapEx spending, and that's like Amazon does, right? They talked about how much they're going to spend. But I feel like compared to other things that you guide for, I don't know that you get the same hit in the market if you don't meet that kind of guidance, right? So let's just say you say you're Amazon, and you say, all right, we're gonna spend $100 million on CapEx for AI. If that ends up being 80 million, I don't know that there's like this big like, oh no, as if like compared to when you say you're going to you guide for like $10 billion of revenue and you come in at $8 billion of revenue. Like,
Yeah.
I guess maybe it will still impact them because it shows that like demand for AI is slowing. But I don't know, CapEx spending guidance just doesn't seem like it's that market moving, but maybe I'm thinking of it completely wrong. Hey everybody, we'll be right back, but first a word from our sponsors. FinChat.io is the complete stock research platform for fundamental investors. They have all the standard financial data on more than 100,000 stocks globally, but beyond that, they have company-specific segment and KPI data on around 1,800 stocks. So for example, do you want to see NVIDIA's data center revenue growth? They've got it. Do you like to track Apple's iPhone sales? They've got that too. Or how about nights and experiences booked for Airbnb? You guessed it, they've got it. And they just added around 8,000 ETFs and mutual funds to the platform. The breadth of FinChat's data is truly one of a kind. I use FinChat every single day as I'm researching the stocks in my portfolio, specifically when I want to see how they're doing on KPIs that FinChat is famous for. So to get 15% off any paid plan, go to finchat.io/unscripted. That's finchat.io/unscripted to get 15% off any paid plan today. The link will be in the show notes. Hey, Investing Unscripted listeners, this episode is brought to you by our friends at Yellow Brick Investing. Yellow Brick is an aggregator of the best stock pitches across the internet. By tracking thousands of blogs, newsletters, fund letters, podcasts, and more, they're able to collect and summarize the best stock pitches from all over and bring them to you in one single place. Think of it like a modern value investors club. I have to say, this is pretty cool. I can just type in the company I'm interested in and get a bunch of different stock pitches from across the internet. It helps me think through new ideas and find opposing points of view on the stocks I'm interested in. And the best part is, access to Yellowbrick is completely free. Try it for yourself. Simply go to joinyellowbrick.com and search a company or ticker you're interested in. You're bound to find a great report on just about any company. That's joinyellowbrick.com.
So in this particular case, I expect it's going to be market moving
Because it shows
so
that
much
AI spending is slowing down.
Yes, and there's this again, the speculation around the CapEx is the proxy for the future opportunity, right? So when that number goes down, there's an assumption that the future opportunity is weakened. I think what it's going to come down to is with those CapEx numbers is what are the revenue numbers tied to AI at the same time? If the company's guiding for, hey, we think we're seeing this line of sight for AI derived revenue to be here. And if the market perceives that as positive and they're lowering CapEx for some reason, then maybe things are fine. But I mean, my anticipation, Simon Erickson, when he was on for our Reckless Predictions, his prediction was that there was going to be, no, it wasn't Simon that said it. I think it was John Ratanti. Was it John or was it Simon?
We haven't said it yet, so I don't know.
The prediction that these big tech stocks were not going, there was going to go through a downturn, and it was going to be because of guiding down for CapEx.
I don't remember.
I can't remember who said that came on the show. But the point is, I think there's so much focus on CapEx in this case because it's so much of the future opportunity for so much of tech that, I think it could be ugly. We got comments coming in.
Yeah, go ahead.
I wasn't going to read them. I was just saying that.
This is my job to read them.
Yeah.
All right. So, Teo, we're going to come back to your comment because we're going to talk about the portfolio contest in a little bit. So we'll skip that one for now. But Teo also says when the chip stocks went down 15% the next day, other software and tech stocks, at least his, went up by almost the same factor. That was the weird thing. Like that Monday of last week, after the DeepSeek news broke over the previous weekend, like my portfolio had a good day, except for the stocks that touched AI. And it's odd to see like mostly green and then three like dark red, sitting there.
It's Javon's paradox. Because the idea is, okay, oh wow, AI is going to be this much cheaper. So Salesforce and DocuSign and all these software as a services companies that provide a specific application for a specific need, they're going to be able to integrate AI at a much lower cost.
Yep.
Right. and still create value for their customers. So a real clear positive sign when your cost of goods sold could potentially be, 90% lower. So yeah, it makes sense, really. It makes sense that happened. Simon Isat says, I see Amazon as scaling to meet demand, especially as they offer DeepSeek and AWS. I think we're going to see a lot of AI developers build on what DeepSeek did. And we're going to see I think we're going to see a big acceleration over the next 2 years with what generative AI can do. So,
yeah, I don't feel any differently about AI now than I did 2 weeks ago, I guess is the way I'm coming away from this news. Like,
yeah,
I was, I think every time you and I have talked about NVIDIA, just as an example, I've shared the same, like I'm of two minds of how to think about that stock within my own portfolio. Like I could see the scenario where spending falls off and their stock takes a big hit because so much is priced in. And then I could see a scenario where 3 years from now, we're going like, when is it going to slow down? So, and I don't know that this has given me any further clarity on it, but I also learned a lot about everything I'm saying from that one Ben Thompson article. So
yeah,
I have a lot to learn here.
Yeah, it's worth it. Oh, let me just pitch this, promote this real quick too. So one of the things that we're doing with the newsletter is when we have people like Nick and Casey Rossalillo come on, who also do written content that's super high quality and relevant, and we think it adds value. We're going to start doing some guest posts onto our newsletter. So they wrote up, it's like 2,500 words. It's pretty long and in depth write up with some deeper thoughts on DeepSeek broadly and how it affects the industry and particular companies. So we're going to run that on investingunscripted.com this weekend. If you don't subscribe to it, go ahead and subscribe. Again, it's investingunscripted.com, and you'll get it in your email at 6 a.m. Sunday morning when we send that out. And there's all the links to all of their stuff as well. I really encourage people to check that out and let us know too. This is the big thing I wanted to say, Jeff. Positive or otherwise feedback about us doing guest content on the newsletter. I think it's going to be great and useful. But I want feedback if it's something that serves the people that are subscribing too.
Yeah. And the best way to leave the feedback is to go to the podcast apps, give a 5-star rating.
Yeah.
And then go to Apple Podcasts. And after you've submitted the 5 stars, give us your feedback about the newsletter there.
Right. Or just email us the feedback, but you have to do the 5-star first or we won't look at your feedback.
Right. Yeah. So Simon's got a question here, which is timely for me because I actually was at a meeting today for my day job where we talked about AI in education. So I think this will be fun to talk through for a few minutes. So Simon asks, how has AI impacted your lives? Asking, as I am a very infrequent user of LLMs or large language models. And any other people on the live chat, feel free to add your comments to how you're using AI in your lives. So I'll start, Jason, and I want to hear how you're using it or not using it. I don't use it often, but there are a lot of places I could and probably should be using it. And I just haven't yet because I'm kind of lazy about changing my habits and patterns.
Yeah.
Places I have used it, and I'll talk about it through like investing first. I find it's really helpful for, I think of AI as an assistant. I think of it as a tool to help me do the things that I don't want to spend time doing or that take a long time to do. So I've used it when, like, let's say I read an earnings transcript and then I remember there was something in there about CapEx spending, right? Then I can just upload it and say, summarize what this says as it pertains to CapEx spending, right? And I'll get a nice little paragraph that explains it. So like, it's good for stuff like that. It's also good for, I think, it can be good for summarizing longer content, but it also gets it wrong sometimes. So I have found that that's not as helpful as it can be. But if you read about how to prompt AI from people who use it a lot, it has like really big potential to save a lot of time. But I feel like you have to develop the habits of using it in order to get that benefit. I have a colleague at work in my day job who spent a lot of time training, I forget which large language model he uses. I forget if it's I think it's ChatGPT. It might be Gemini. But he spent hours uploading almost everything he's written that he has digitally to like train the AI. This is how I write. And then now what he'll do is summarize like short things he's got to write for work. Rather than write a 3-paragraph thing or write an email from scratch or a letter that's going to go out to people, he'll say, I need to write a letter. It's meant for this audience. And it has to contain these 5 things. And he'll just like sketch them out in bullet points. And then,
so he's making sure when our AI overlords take over, they really know exactly how to replace him.
yes.
That's
So like, I'm uncomfortable with this for 2 reasons. Like, I don't want to spend that time on the front end to like train a model, but like also I don't really want my personal content. Like
you don't
probably
trust the companies building the AI.
I really don't.
Yeah.
But anyway, I only tell that story to say, I think if there are things in anyone's job that are like semi-repetitive, like, or when you have to take like bullet notes and put them in a narrative form, like you did the work, right? You wrote out the essential information and someone's got to put it in a paragraph form, like a narrative. It can be helpful for that. But yeah, I know people who are like power users and they spend all day using it. And I've not found it to be that helpful yet. But there's certainly places I probably could and should use it more. What about you? Do you ever use it for stuff?
I don't. I will, because I tend to be a very late adopter of things, mostly because
You're old.
Yeah, that's really it. But it's that the friction of making these sorts of changes to habits and behaviors is something that I think is a challenge. But one of the ways that I intend to use AI, from talking to a number of people that actively, regularly use it, is as a tool to get different answers to questions than the answers that just pop up in your head naturally. Humans have bias. We have life experiences that inform the way that we think about things. That can be a superpower when we're experts in things, but it can be a massive blind spot. And really, honestly, most of our lives, right? Because we like to think we're open-minded and thoughtful and all of those things, but man, we are so programmed to act and behave in certain ways that now here's the key. These LLMs have bias as well based on how they're trained and what they're trained with. So, I mean, that's a factor you have to consider, but they can also be really useful tools to get answers that may be different than the answer that you think is the right answer about things. And as an investor, I think that can be extremely practical. Here's an interesting example, completely different, of another dear friend that my wife and I, a family that we got to be very close with in California. Our kids grew up together. Our son and one of their kids are a month or two apart in age. Have another couple kids that are close to the same age. And we're planning to try to do a trip together this summer. And she used ChatGPT to do an initial plan. And it was fast and it was really good in terms of like, it could easily save you like 3 or 4 hours of research to arrive at the same list of great ideas. And then you can go from there and start kind of trimming it down based on what different people want to do and that kind of thing. But that's the kind of way you can unlock real value.
Hey, everybody, we'll be right back. But first, a word from our sponsors.
All right. If you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. You can even earn some of the highest yields in the industry, like the 6% or higher yield you can lock in with a bond account. Public is a FINRA-registered SIPC insured platform that takes your investments as seriously as you do. Fund your account in 5 minutes or less at public.com/investing unscripted. Get up to $10,000 when you transfer your old portfolio. That's public.com/investing unscripted. Paid for by Public Investing. Full disclosures and podcast description.
Investing Unscripted is brought to you by the Chit Chat Stocks Podcast. That's right, another investing podcast you need to add to your listening rotation. My name is Brett, one of the hosts, and I produce 2 episodes weekly along with my co-host Ryan Henderson. On the Chit Chat Stocks podcast, we talk stocks, a lot of stocks, from the hottest names to undiscovered gems, interviewing sector experts, studying super investors and why they are successful, and we have a fun time while doing it. Follow the Chit Chat Stocks podcast on YouTube, Spotify, or Apple Podcasts, and never miss an episode.
Sina has a comment that's similar. I've used it for the past 2 weeks of dinner meal planning. It's not perfect, but helpful. Like, it is good for stuff like that. Actually, you know what? How else I've used it? You just reminded me, Jason. Sometimes when I write something, I struggle for like how to start it.
Yeah.
Like that intro paragraph. And sometimes I'll just say like, I'm writing an article, or I'm writing an email, or I'm writing a letter about this. Give me an introduction sentence or two. And I won't use it, but I'll be like, oh, that's a good place to start. Like, it thought to start from here, and then I just write it in my own voice, but I use that idea. So like, I think it's good as a starting point for a lot of things.
Well,
we had a whole bunch of comments.
I think is a great example, Jeff. Writing's a great example because the 2 hardest parts of writing are the 2 most important: starting and finishing. Right?
Yeah.
So I think that's good. Go ahead. You were about to grab.
We had a bunch of comments responding to this. So Kleban says, I use ChatGPT anytime I have a tech issue, like connecting a wireless remote to a TV or figuring out how to do hidden keys on the washer. That's a good use for it. I didn't think of that kind of stuff. Colin has a very funny comment. I work in the mountains with my dog, cruising the forest to buy cedar logs for my company that makes utility poles. I don't use it. I don't even know how to spell AI.
He spelled it sort of correctly. He didn't. He missed a capitalization.
Ryan uses it for his day job with debugging formulas or queries, or even just writing a more elegant process documentation for my crappy notes. Sina, again, for questions about a company or a technical investing question I might have as a start. So I've used it. That's another investing way I've used it, Jason. Like, I own a company, or I'm interested in a company. I don't understand what they do. So I will say, like, what does this company do? And then I'll say, like, explain it to me like I'm an 8th grader or a 5th grader or a kindergartner.
Right.
That's a good way to use it.
I love Ryan's question here. I also work for a Salesforce partner. So last week I was scrambling to get 4 agents live in production so Benioff could meet his quota for Wall Street. That is absolutely hilarious. It goes on to say the client, we're generally excited about the changes, improvements it will bring to their workflows there, though. And I will say this, though, this is one of and I keep using Salesforce because to me, it's like the most apparent, like, translational example of where I think AI at its current level can be really useful. It's for companies that already have software in the enterprise that does a thing really well. And you can add AI and automation, like the agents in this case for sales, for a CRM, for a sales team. My experience, I was in outside sales for a long time. I worked with a lot of people in outside sales, and salespeople are either maniacally hard workers or they're exceptionally lazy and won't pick up the phone and call a client or a prospective client or knock on a door or send an email. But with AI, you can get relentless automation that works really, really well at identifying sales leads, creating opportunities, managing inbound customer contact. Like, it's getting to the point where it can be better than people because it will be consistent and regular, and it will do what it says it's going to do or supposed to do. Obviously there's real flaws. There's substantial flaws, but it's a perfect example of where AI can be valuable and create value for paying customers and generate better margin for the businesses that integrate it into their products.
And I think that's where we're all going to end up using it. Like, so Gmail does this actually pretty well right now with very short responses. Like, it'll auto generate, like, sounds good, or great, see you there, like, as a quick response to emails. I actually use them at work all the time because it just saves me the time of typing thanks, see you there.
Yeah.
But I can imagine a world where that starts to get more robust, and you click a button and it composes a short response, and then maybe you tweak it, but you just saved yourself 2 or 3 minutes typing that initially, right? So I think you're going to see little things like that. All right, I don't want to read every comment because I think that'll be less exciting for the people who are listening to this later, but Jesse wrote something that I think is worth mentioning. So he says, my company has started using an AI program to review contract documents, searching the T&Cs that either align with or fall outside of our quote unquote playbook. So that, I think, we're already starting to see in a bunch of places. Like just this past week, I got email alerts or something from both Adobe and DocuSign about, no, it was from Adobe, but it reminded me of something DocuSign was trying to do for a while, where they were, a year or two ago, DocuSign was like really trying to get into the, I forget what they called it. Like it was more like the contract aspect of DocuSigning things. And it was
Yep.
basically like you can upload 2 versions of a contract and it will use AI to like show you where it changed, right? So you don't have to read a 400 page or 20 page, whatever document. It'll just be like, here are the places where this is different. Yeah. I think we're going to see a lot more of that kind of stuff in
Yeah.
places where you need to look at revisions on things. Like I could see like that being really helpful. But you know, it's crazy how fast this is all developing. Like 2 years ago or a year ago, you know, a lot of these things would have been like, that sounds nice, but nothing can do that. And here everything is.
I encourage people that are watching this live right now. You really should go read Teo's shouting match that apparently he had with his AI assistant trying to get him somewhere. Maybe it was Google Maps or something like that. But yeah, no, it's pretty hilarious. Technology is still at the point where it can frustrate the ever living what out of us. That's the best.
Yeah. And I think we're going to be, and maybe we should wrap up and move on to a new topic, but I think it's going to be messy and frustrating for a while because we are in this rapid adoption change phase of this new technology. So I think it'll be a while before it kind of settles into being a stable thing that we use all the time, like other formerly new technologies now are, like email and things like that. All right. So we killed half the hour talking about AI, Jason. I think the other big news in the time since we last did a live show is probably tariffs, the on again, off again delay tariffs. So just as a 30-second primer, there was a day where there were tariffs on Canada and Mexico. And then in that same day, they were delayed a month. The market went down and then went up on those 2 pieces of news. There is still tariffs on China, which did not seem to move the markets necessarily. It felt like that was a little priced in.
Yeah.
But I think what's interesting about the tariffs is, you know, you and I got a lot of questions during that week about what do I do? How do I think about this? How do I invest? How do I not, should I not buy stocks that are, and I think you and I are on the same page in the sense that like this too shall pass kind of a thing. Like we're hopefully investing for the very long term. And if you are buying good, strong businesses, they should be able to weather the storm. But it does introduce a lot of uncertainty, especially as these are just kicked down the road. Like, I don't know, at the beginning of every month, are we going to be back in the same boat where the day of, because they were only delayed a month for both Canada and Mexico. Right. So I do wonder if whatever a month from that day is, early March, we don't get another, okay, it's a Monday, the market opens and there's tariffs. And then by the time it closes, there's not again. So it's going to introduce some uncertainty. And I wonder how the market reacts to it the second or third or fourth or fifth time we go down this road.
Yeah. And to me, like there's wondering about it and whether I actually do anything. And this is one of those things that I feel like the worst thing to do as an investor is try to like time your way around any downside, because it's almost unavoidable that something is going to happen with this administration. We learned that 4 years ago with the Trump administration, just his leadership style and the way that he attempts to negotiate and work through these things is very different than anything we've ever seen from any administration before. And that means there's going to be periods where shocks are going to happen, right? So sometimes it's just unavoidable that you're going to go through bad periods of time. And the better thing to do is just kind of hold firm with what you were planning to hold anyway, accept the fact that you're going to get worse returns for a period of time. It's unavoidable. So long as your goals are far enough out that, it doesn't matter. And if your goals are in any time during any individual president's administration, you shouldn't be owning stocks for what needs to be money for those goals anyway. They're just too close, right? They're just too close. So it gets back to the conversations that we've had, and I think next week's episode is going to talk about. That's next week's episode, right? There's always something.
Yeah, the one that comes out the Wednesday after people listen to this.
Yeah, so be sure to check that one out, because I think there's some useful conversation in there about building a framework and the tools that you can use, because this is one of those periods, Jeff, where I feel like being able to manage yourself is so important to making the best of your returns, avoiding losses, and getting through it with a healthy mindset.
Yeah. LDP has a good thought here, though, saying, I guess the biggest effect is going to be on inflation, interest rates, and bonds. If interest rates have to stay high because of inflation, what's going to happen to the U.S. deficit and debt? So I do think that's a fair counterpoint to us saying, ride this out. In a world where we have sustained high tariffs that actually do push inflation back up, and then we go back through this whole cycle again of high inflation and then higher interest rates, and then we relive, that 2022, 2023 cycle. But I guess the pushback on that pushback would be, but look where we are now, right? Like there's always another end to that saga. And if you're holding on to things for the very long term, it should all kind of shake out. But I think that's a fair counterpoint, like in the shorter term, just keeping an eye on inflation and how that impacts rates and that kind of stuff.
Well, that's true, but I think we have to remember that money is only infinite for the Fed and Elon Musk. The rest of us have a limited supply, and in the interim,
well, speak for yourself, Jason.
Okay, all right, Elon Jr., nice try. But my point is that at some point, the bigger risk is not inflation, it's not interest rates, the Fed and deficits and the debt. It's global recession, right? If this becomes so entrenched, where you have, the two largest economies in the world that are at loggerheads, and then, we see substantial downside, and that's when it gets harder to hold. That's when it gets harder to hold, because it always feels like it can get worse, right? And without having things in between you and your stocks to keep you from selling them when you don't need to sell them, it's just really damn hard when the world feels like it's upside down, right? So there are bigger implications. Hopefully we don't get anywhere close to that, but
yeah, I'm still working on the assumption that our current president, more than maybe even some others, is sensitive to stock market moves. So that's my hope, that this won't get too crazy, but who knows? We'll have to see. Colin has a comment here. These periods are easier to stomach with index fund ETFs. The volatility won't hit as hard as when you see your one manufacturing stock that takes a 20% bath. Yeah. That's a fair point. I mean, if the volatility of individual stocks feels too hard on you during times like this, I could see feeling more comfortable in ETFs and index funds for sure.
Yeah, absolutely. Or a hybrid mix approach that I think you've talked about your approach, Jeff, and I think that's one that most people have, right? You've got your 401k or 403b. Most people have that same situation where most of your wealth is in a retirement account that's in index funds. And then you have a portfolio that you manage that's much smaller, that's stocks. Not a lot of people out there that are structured like me, where I get to have a solo 401k where I am in individual stocks in. So Ryan talks about the Psychology of Money, Morgan Housel's book, specifically the audiobook version. Our friend Chris Hill narrated. All I'm going to say is, Chris Hill, stay tuned.
Yes.
That's all I'm going to say, friends.
Don't say anything more than that.
Nothing else to say.
Yeah. All right. I want to take a few minutes to talk about the portfolio contest, because we haven't really talked about it at all since it kicked off at the beginning of the year. And there's some stuff that I just need to make sure listeners are aware of, because this is a much more higher participation level this year, which is great. Like, it's really awesome that we had so many people submit portfolios. But there's a couple things that I think everyone needs to know if they submitted one and they're listening to this. So the first is, we're not going to do monthly tallies where I go through and give the monthly results for everyone's portfolio. And the reason is I don't have that kind of time. Maybe if I can get an AI bot to do it, I will. But we had like, I don't even know how many there were, but dozens of portfolios submitted, and some of them are rather large. So
Jeff, let's be honest. This is really just because of Tyler.
It's entirely because of Tyler. Well, I'll complain about Tyler in a minute. But just generally, we'll still do the quarterly ones. I'll take the time to do that because that's what we agreed to in terms of like donating to that person's charity. We want the charitable piece to still be here. So I will do it quarterly, but I won't be doing it monthly. But we will still talk about it on all the live shows. That's the first thing. The second thing is, if you submitted a portfolio, it is your job to double check that our spreadsheet is correct, because some of you gave me either weirdo tickers or things that have OTC tickers and also tickers on foreign exchanges. And sometimes I chose one and sometimes I chose the other. We did have someone reach out to correct something, so I was thankful for that. But don't assume that the spreadsheet's right. Like, double check your portfolio, because it's Google Sheets pulling the data. I could have just screwed something up. So email us if you have a question. Email is the easiest way for that kind of stuff. And check my work. Now let me complain about Tyler because A, it's fun, but also
this is what I was here for.
All of his stocks are like these bizarre, weird ones that I can't pull the data on. So, one of his has a highlighted yellow price. That means I can't pull it electronically, and I have to update it manually. So if anyone else sees a highlighted yellow price, that's because it has to be done manually. And he's got one, Jason, in Tyler's portfolio, the South Dakota Soybean Processors LLC, which is absolutely the most Tyler Crow stock ever. The price has not changed since January 1st. So it was $9 on January 1st,
well,
still $9.
That one in particular, like it doesn't even trade on like a regular exchange, like that a regular person would buy stocks on through their online brokerage.
So anyway,
it's very Tyler.
So the link to the portfolio, if this is new to anyone listening or watching, is in the show notes of every podcast episode, way at the bottom. So I encourage you to check it out, see how everyone's doing. We have some audience members that are doing really well. We got someone up 19%, a couple people up 11, 10%. As it pertains to the show guests and hosts, I'd just like to point out that after a month and a few days, my portfolio is up 7.7%. Jason, yours is up 0.6%.
Yes, but it's not down 40%.
That's right. Which brings me to Teo's comment from the very beginning. Now, I said I would go back to it. Let me find it. He says, okay, spicy comment of the month. Have you guys been replaced by aliens, Simpsons style, because your portfolios in the contest aren't deep in the red? Yeah, that is a fair burn.
Context. The Jason Hall 2024 portfolio contest portfolio finished. Where did I finish? Down
a lot.
Down over 40%. And yours was down about 8%.
So that was just better. It was better than yours.
No, you were less worse than me. The market was up 25%. We both absolutely
were terrible.
Sucked.
But our Savvy Trader portfolio, which if anyone wants to subscribe to that, is doing very well. So I'll put that out there.
Yeah, no, that's true. And let me say this. Let's take a second to talk about this. I don't want to sound like I'm promoting it, but I'm going to promote it a little bit. But we went into the idea of starting the Savvy Trader portfolio, which this is behind a paywall. So if you want to see the portfolio, you have to pay. We like making money, a little bit of money on a few things. But we went in it with a very clear strategy and approach to be very mindful about the stocks that we were picking and the goal of outperforming the market. That's our goal, is to outperform the market, having a steady cadence of putting in cash, investing that cash once a month. And with the 2024 contest, honestly, I was just trying something out. I'm like, you know what? Let's just bottom feed a little bit and see what happens.
Well, we were looking for content.
Yeah, it was
looking for stuff to talk about. Yeah.
But with the Savvy Trader portfolio, the point that I wanted to make is, if people are going to pay to access something, I want there to be meat on the bone that's valuable to help them make better investing decisions. I don't encourage anybody to just follow the portfolio. I mean, we publish the stocks that we're going to buy in the portfolio, a day or two before we do it. I mean, we don't have enough of following anybody could front run anything, but I mean, you could easily follow it and track it. But I think it's a great expression of how you and I both approach investing.
Yeah. And we do accompany a 5 to 10 minute video for every pick that explains our thinking. So
by 5 to 10 minutes, he means 15 to 30.
Yeah. We go into it trying to make it 5 to 10 and then Jason talks.
So
confirm. Ryan has a comment here. It sounds like excuses, Hall. And you're right, Ryan. That was just a lot of excuses.
100%.
Yeah.
Yep. I was flippant and silly and I made bad decisions.
So Simon's asking, would we accept a portfolio of non-US companies? We would have. It's a little late now. I don't really have a mechanism to get people in after the first couple of days of the year. But yeah, we have some portfolios that are largely, Tyler's as one. It just becomes hard to automatically update them because it depends on what Google Sheets will pull automatically. LDP is asking, do you guys sell covered calls in these volatile markets?
I'm glad you're asking this because so selling covered calls, just for anybody that doesn't know what that means. So
30-second timer, go.
Got it. So you own at least 100 shares of a stock. You are getting paid to give somebody else the right to buy that stock from you at a certain price when that call expires. The risk is if you sell a stock and it keeps running up and it closes above what they call the strike price, they get to buy it for the strike price. So if you sell a stock, let's say you sell $100 call, right? Which means that somebody can buy that stock for 100 and the stock's 110 when it closes, they pay $100 for $110 stock. So the risk there is leaving gains on the table, right? And in an environment like we've been the past couple of years, where we've seen so many stocks continue to run higher, the risk is having good stocks called away, and again, leaving returns on the table. What I've tried to do is find really, really excessive premiums, which is the commission. Basically, it's what you get paid. And a few. I think I found one with Trade Desk that expires in about a year. There was like a 35 or 40% premium over the most recent stock price, and paid the price, the strike price was like a 35% premium over the most recent stock price. And the premium that I was paid was pretty substantial. It was enough that I would be very satisfied. I think it worked out to close to a 40% gain from here if the shares are called away. So I'm only doing it where I would be very satisfied to sell the stock at that price, even if there was some risk of leaving gains on the table, because it would be a situation where I'd be looking at a stock. Why am I still holding this? This has run so much. And like I would start getting preoccupied with it because it's done so well and like the valuation would get stretched. So a little bit, not a lot, but a little bit. But what I have been doing more of, Jeff, is I've been selling puts, really deep in the money puts. Again, where I see some opportunity. The risk there is having stocks put to me that I'm having to buy for a higher price than the market might be bearing. But I'm trying to find really discounted prices. And again, a price that I would be more than willing to pay, even if the stock might be a little bit below that. That's what I've been doing with options.
Yeah. And LDP and anyone else who's listening or watching, we have an episode from a couple of weeks ago with Jeff Fisher, all about options, where we go into a lot more about this. So if anyone has not checked that out, go back and listen.
We're going to have Jeff back on too at some point.
Yeah. That's an area of investing that needs more than a 1 hour introductory episode for sure. John has a comment to me, telling me not to make fun of Tyler because Outset Medical says hello. Welcome, John. But to be fair, I'm not making fun of Tyler. I'm not saying he's a bad stock picker or he's bad at the contest. I'm just saying his stocks are annoying on a Google sheet. That's all. That's all.
Tyler is an exceptionally good stock picker. Jeff has every reason to be upset about the 3 hours of work it takes to price the 7 weirdo stocks that he put in the portfolio contest.
I know. I'd go to different websites to try to get even the stock price on some of these. All right, Jason, we got about 10 minutes left. Let's spend the last 10 minutes talking earnings. Let's talk about companies that we follow and like that reported and what we thought about the results. Let's talk about stocks we're looking forward to. You kick us off. What's a company that has reported that you thought had interesting results?
So PayPal's results, I think, were interesting because there continued to be some positive spots. I don't even know if I'd say they're bright spots. They're decent spots, but they're spots that are not bad anymore. Like the growth, a little bit of growth in active accounts. That's a positive considering where the business was, a year ago. My concern is that the growth rates are still really, really low.
Yeah, revenue only grew 4%, which is actually a continued deceleration from the past several quarters.
Right. And the white label payment processing business, they say that they're kind of focusing more on monetization versus transaction volume. I don't know if they're focusing on that or they're expecting to lose some more transactional volume deals at some point from some of the companies that they do a lot of payment processing for. So my initial reaction, I've kind of moderated on a little bit. My initial reaction was like, things look good and I'm less concerned about this particular thing. And I'm like, well, I'm in less of a hurry to add to the small position that I have, I guess is what I'm saying.
Yeah, that's I think the last thing you said there is the way I feel about it too. Like I bought a little, I don't know, maybe in like October, like not that long ago. Actually, no, I'm wrong. I checked today. It was actually the summer. I bought some in August and I'm in the same boat. Like had this quarter showed me continued acceleration of the things I'm looking for, I might've bought a little more. And yeah, it was great to see active customers tick back up, total active accounts. And actually that's ticked back up really small the last couple quarters, like sequentially, like the chart is now after dipping down is starting to slowly tick back up. But what I want to read more about it. I haven't listened to the conference call yet, but one thing that jumped out to me, the payment transactions per active account actually went down sequentially. And that I want to learn more about because that was always something I was kind of hanging my thesis on a little bit, which is even as active customers slowed or decelerated, they were still growing active account or payment transaction per active account quarter after quarter. So that says to me, like you just said, they're getting more out of the customers that they already have. So I want to go see like why that ticked down. But total payment volume kept going up. Payment transactions been flat for a couple quarters. So yeah, mixed bag. I see why it was down. The initial reaction was down. Nothing crazy, but down enough that you notice kind of a thing. So yeah, a little bit of a wait and see for me as well.
So Meritage Homes reported about a week ago. It's one of the home builders that I like a lot. And a couple things. So their units, we've seen the impact of cost and interest rates start to kind of flip the book a little bit. They closed for the full year, 12% growth in homes sold units was up 12%. Revenue was up 5%. 6% decline in average sales price. So a lot of that's the impact of interest rates. They're just having to be more competitive with their pricing. But again, the volume number was really good. They are really focusing on spec homes, and that's becoming good. They're trying to, but they keep getting customers that sign deposits and getting bookings because there's no inventory out there. The thing that I like maybe the most was the guidance. It's modest growth, $6.8 billion in revenue. At the midpoint of guidance, revenue was like 6.3. So again, another modest revenue growth year. Probably going to build about 1,000 more homes. That's about a third lower growth rate in units than last year, but it's still growth. And there's a lot of pressures on home builders, particularly in the Sun Belt where most of Meritage's business is. But I think it indicates that the industry is still healthy. It's the key growers like Meritage are still growing. So that was positive. It was kind of reassuring for me. Doesn't mean they can't lower their guidance at some point if the housing market gets the rug pulled out from underneath them because most of the labor gets sent out of the country. But that's another issue for another live stream.
Yeah, for sure. That's a wait and see. We got a question from Teo about Pinterest earnings. It's funny. I sold Pinterest a couple of years ago, so I haven't tracked it or followed it as closely. I still update my spreadsheet when it reports just so
I
I
looked
can.
at it today,
but I haven't looked at it yet, so I don't know
I
if
did.
you have anything to say about it.
Yeah. So the results were generally pretty good. Revenue growth was like 18-19%, which was solid. And we saw like a little bit of the same trend that we've seen. I think user growth and average revenue per user in North America was low to mid single digits, like 4%, somewhere around there. Still growing really fast. Everywhere, Europe and North America is still the slowest. That's the most
rest of the
important
world
market.
is really growing.
It's still growing fast. But again, the key is like you look at the monetization rates, how massive of a difference it is. What's the full year average revenue per user in the US? And it's like close to $30, $29, I believe.
Yeah, I'm looking. US and Canada. No, it's not that high. Average revenue per user is $9, but
no, that's the quarter. I'm talking about the full year.
Oh, full year. Hold on.
It should. I know there's a in their release. It's like $29. It's pretty high, but
it is $29.15. But rest of world is 59 cents.
But here's the thing. I was talking about this on that other live stream that I was on today. I can remember that when it was like 24 cents, that rest of world. So it's starting to become more meaningful. And the
question though is like,
audience,
but if you're hanging your thesis on that, like it's going to be a while before it's meaningful.
It is. And that's exactly right. I mean, that's the thing. But the key is like you're growing that US and Canada market, still growing at 4%. That's good. That's okay. That's good. That's good. There's positive signs there. But the big thing is like, this was a super duper low expectations quarter. Like expectations have been in the dumps for a while because the growth has been really paltry and most of it it's just been because the ad market's healthy, not because they're necessarily doing things better. Right.
Yeah.
But this was a good quarter.
Yeah. I want to go back and look myself because it's one that I want to keep tracking, even though I no longer own it. All right, Jason, last 2 minutes, we started talking about sports. And let's end talking about sports because Simon, our viewer from Berlin, is asking, Jason, I'm guessing you're a big baseball fan. I'd love to see a game. Any recommendations on teams or stadiums? So I'm going to answer first, then you can answer.
Okay.
This is not biased. I truly believe this. Citi Field, where the Mets play in New York, is actually a really great place to see a baseball game. It's a good stadium. It's fun. There's stuff to do. The food's good. It's in New York, not that hard to get to if you fly into a New York airport. And if you catch a game when the Braves are in town, it is a legit good rivalry. Two good teams that play well. Now, I've not been to Atlanta Stadium, the new one.
It's incredible.
Yeah, I'm imagining it's very good. So let's also pitch Atlanta as a place that Simon can come see a game.
Yeah, so the new stadium in Atlanta Truist Park is great. It really, really is. One of the things that I like about what they did. So the Braves, Liberty Media, the Braves, it's been spun off as its own entity now, but they own all of the real estate around it. There's mixed use, there's apartments, there's all kinds of restaurants and shopping, and it's all walkable right there around the stadium. And there's a ton of parking, and it's north of Atlanta, a little bit west. So it's a lot more accessible than it was back when they were down south of the city. So it's great. It really is a great place to see. I will say this though, my two favorite baseball experiences ever, and they're very different. Going to Fenway Park, public transit in Boston, one of the oldest cities in the country, narrow streets. It's sitting right in the middle of I mean, it's right there. It's
Wrigley
right
Field
there.
is like that too.
Yeah. It's if anybody's been to Wrigley, it's kind of the same idea. That is wonderful. It really is wonderful. A totally different experience is Dodger Stadium, but equally wonderful. You got to drive to it. It's totally isolated from anything. It's like an island. The stadium is an island surrounded by 100 acres of parking lot, right?
And it's like the third oldest stadium now.
It is.
I think it's Fenway, Wrigley, and Dodger Stadium.
but it is also an equally wonderful place to see a game. And I think as much as I hate the Mets, the Dodgers are becoming the new evil empire. They're very hateable.
Well, speaking of evil empires, as it is now 5:01, I need to finish by telling Ryan Treader, who says that his friends, his Jersey workmates would say Yankee Stadium. That stadium is hot trash. It is cold and heartless and terrible. Old Yankee Stadium was great. New Yankee Stadium is trash.
Ryan,
Okay.
I would love to go see Target Field. I would love to go see a game up in the Twin Cities in Minnesota. That's true. All right. We're up against it. We are at 5:01 p.m. So it is time for us to wrap it up.
Yeah, let's do it.
Everybody that joined us, love the banter, love the questions, love the comments. If you've never done one of our live streams before and you're listening to this, just show up. It's a Friday at 4. You have no excuses not to be here with us.
Yeah.
Come do
Get
it
a
live with
drink,
us sometime.
hang out with us. It'll be a good time.
There you go. See, it's just that easy. Just that easy. But until then, always remember, we love the banter, give our answers, share our thoughts. They're ours. We own them. You've got to own your own. You have to own your own. But you know what? You can do it. Mark Murray, welcome, buddy. Good to see you. You can do it, guys. We'll see you next time.